How to turn your cash flow into an investment system that is going to generate your returns year after year in order to create real wealth. You're probably already rich, but you are looking to be wealthy. In this video, I'm going to show you exactly how to do it using the TPM system: track, protect, and multiply. That's how, in the past 12 months, I've generated 41% returns on my net worth. And that's the same system my clients are using. For who this works? It works for founders doing at least 5 figures plus profit per month with their businesses and capital owners having 6 figure plus net worth in USD. Before multiplying, you have to protect your capital. And before protecting your capital, you need to know how much capital do you currently have. So, know your numbers. How much did you make exactly last month? How much did you spend exactly last month? Because the thing is, every founders are tracking their KPIs based on their businesses. But on the personal level, they don't track anything or barely anything. Then, what is your current net worth? Try to guess now. If you don't know it, that's a real problem. How many months of runway do you currently have? How much do you have in liquid assets, which means assets that you can sell within 24 to 48 hours in order to have cash in your wallet? Then, in order to know your net worth, your income, your expenses, your investments, allocations, you need to have a tracker. You can use many apps online, such as Finery and others, but I don't like them in the way that I don't trust them. There is leaks every time about your data. And your goal is to be protected. Because if you want to be wealthy, it means you need to protect yourself before multiplying. And protect yourself doesn't mean only protecting your money. It means protecting your own life, your own informations. So you can create custom spreadsheets, as I did with my team, for Insiders Capital members. You can track everything in one place through your dashboard with your net worth allocation, assets, income, expenses, loans, investment portfolio, and compound calculator. So there is 3 sheets I want to show you. So let's go directly into this example. The first one will be income, right? So you need to know exactly your passive and your active income. Passive will be affiliates, for example, dividends, rents, etc. And then active can be the salary you took from your agency, from your coaching, from your software, from any other businesses you have. Then you need to calculate all your expenses, such as your rent, utilities, subscriptions, food, transport, restaurant. Of course, it's just categories. Entertainment, improvement, travel, health, learning, others, etc., etc. This is just a demo sheet. Then your investment portfolio. How much do you currently have in cash? What's your consumable assets, your productive assets? What's your investment portfolio? 80%, for example, safecore, 20% speculative. I'm going to talk about that in the multiply part, lending, etc., etc. Then, if you come back, now you know how to track. You have to get your custom spreadsheet. You have to track every single dollar every month. Then, let's go into the protect phase. Here are some of my rules, and my clients are using it as well. Runway, 6 to 12 months. So runway is basically how many months you have left before running out of money. So this is literally a startup term. So for example, let's say they are spending 10K per month. So if they have 60K in their bank account, which means they have 6 months runway. No revenue, no income, nothing. They can live 6 months with 10K per month expenses. So know how much do you have in your bank accounts. Let's say you have 100K in your bank account and you are making 10K per month, then you have 10 months runway. But now you're on 100K, you have only 30K cash and the rest is, I don't know, like in Bitcoin. So 70K in Bitcoin, which means if you're spending 10K, you only have 3 months left. It's not good at all. So make sure you have 6 to 12 months runway. Then you can optimize your expenses. The goal here is not to reduce your lifestyle, it's to manage your expenses. For example, mobile subscription here is in Dubai is $90 per month. You can reduce it to $50 to $60 per month. You just optimize $30 per month. But it can be the exact same when you do transfers, right? Or when you convert euro against dollar, etc., etc. Optimize all these things because fees kills the returns. Then make sure you manage personal vs business money. So whenever you are making money with your businesses, make sure it's going to your business bank account or your business crypto accounts. Don't mix all. Make sure you separate. It's very, very important. Otherwise, you lie to yourself about your numbers and it's not good at all. Then one of the most basic rules, pay yourself first. So let's say you are taking from yourself 50K per month salary. You have 10K expenses, but we don't care about the expenses. You want to at least put 30K, right, or even more, into your saving account. And then you have 20K, for example, to live. Maybe you live only with $10K. So you put 40K aside, 5K of those 40K into the saving, and 35K you invest. You do whatever you want. We're going to set later. Then buy back your time. Get a maid, get a chef, get a personal assistant, get a gym coach, get a driver, my bad. Then protect your incomes. Dubai setup, for example, because the thing is, if you are letting 50% of your income going to your government, so for example, I'm French, as you probably know with my accent, if I'm making 50K per month, then I will probably left with 20K in France, right? If I do 50K in Dubai, you will get almost 50K, right? Because there is corporate tax in Dubai. So it's zero income tax if you take a big salary, etc. So that's the thing. Protect your income by paying zero or almost zero taxes. Then protect your capital. Company setup. US LLC, for example, UK LTD, UAE Free Zone Company, Hong Kong LTD as well. I mean, there is many type of structures, right? Then your bank account. Get bank accounts in US, UAE, Singapore, Switzerland. It depends. Choose one of them. Singapore is a bit harder, to be honest, but it's worth the try. And make sure you don't only use wallets like Wise or fintechs like Revolut Business, Mercury, and for example, Slash, which are great, of course, but make sure you are using as well physical banks, such as Chase Bank in the US, or Citibank, Bank of America, etc., etc. In UAE, you can use as well Rio. It's a great bank, but then you can use as well physical banks. Here in UAE, you can use as well, for example, HSBC. Then make sure when you have cash in your bank accounts, it's not just taking and being hit by inflation, right? You need to fight the inflation. So you can use fixed term accounts. For example, in Wio Personal, you take the Wio salary plan. For the UAE resident, Wio salary, you get 6% up to 1 million dirham. So for $300K. 6% per year, guys. It's 18K per year, $1.5K per month. And then the remaining will be around 3.25 to 4%. Contracts. Make sure you have contracts. Asset protection contracts. Liability limiting contracts. Ownership separation contract. For example, trust, foundation. Debt and creditor protection contracts. Insurance-backed contract. I'm going to talk about insurance later, but for example, life insurance. Confidentiality and control contract, such as NDAs. Succession and continuity contract. Will, trust governance rules, etc. Then make sure you have insurance. Make sure you always have health insurance. And in your health insurance, you can have a part of kind of like a life insurance where you can pay an extra or directly get a life insurance, which means health insurance will cost you around $250 to $300 per month, $200 to $300 per month in UAE and mainly like everywhere in the world, especially in US, probably it's way higher. Then life insurance. If you die, you can get a lump sum, which means you can, if you are 25 years old, you put $100, $200 per month in your life insurance, and whenever you die, your beneficiaries, which can be your family, your friends, whoever you want, will get a lump sum. $500,000, $1 million, $2 million, $3 million, right? So it's very interesting. Legal one, it depends how big you are in terms of wealth, influence, etc. And then business, if your business need it. Then you can protect yourself as well by having credit lines, such as the one in the US, because they are the best ones in terms of advantages, such as Amex or Chase. I added HSBC, but Amex and Chase, especially Chase, Sapphire, Reserve, and Amex Gold and above, can be very interesting. You can get cashback or exclusive access, such as miles and other benefits. So as we have seen for now in Protect, set some rules in order to make sure every month you are investing money into your investment system. We are going to set just after. Then you need to protect your income, because if you leak 20, 30, 50% every month of your incomes, then you are working half of the year for literally the government. Then protect your capital. So income and capital are different. Income is how much you are making in terms of cash flow every month, and capital is what's your current capital. You have to protect it, whether it's you have equity in some companies, so you have to protect it and have the proper setup with, of course, the proper accountant, lawyers, contract, as we have seen here, proper bank account in order to not freeze your money, because the goal, guys, here is the following one. Before multiply, you need to protect it. Protect it against what? Bank account bans, against fines, against taxes, against yourself, against the economy, etc. So the goal here is to make sure you are not going from $1 million to zero because you get banned or you have a big issue. Your goal is first to protect. And then once it's protected, you know you have a plan, you have a proper structure, a clean structure with everything set up, then your mind is in peace. You can as well, of course, protect yourself, get a second passport, for example, through CBI, Citizenship by Investment. There is around 13 regions right now, with the most famous one, which is St. Kitts and Nevis. Security, close protection, crypto security, home and travel security stack, Austin defense, and many more. I cannot add everything because there's so many things to add in the protection part. I mean, tracking is pretty easy. You just have literally to track your numbers. Protect, there's a ton of things to know about jurisdictions, legal, contract, get the right accountant, get the right lawyers, get the right bank, and of course, bank managers and the right contacts because that's the most important things. And this is what we bring to our members inside Insiders. Then, multiply. The most important layer, we all agree, to compound and to become wealthy, not just rich. Because again, being rich is having a good cash flow, living the life, being able to go to fancy restaurants, nice travels, give some gifts to your family, etc. But being wealthy is another level. And in order to become wealthy, you need to act as someone wealthy. And someone wealthy is not just a real businessman, is a real investor. You need to put yourself in the investor mindset as well. I know you need to have the founder hat and the investor hat. But how do you want to become wealthy otherwise? You want to what? Create a software company, exit at 100 million, and what? What are you going to do with your $100 million, right? You need to know what is a trust, what are the best bank accounts, etc. You know, we always say you need to visualize yourself. If you don't know where you are going, how can you expect to make as much as money as you want? Because you don't know what you are going to do with this money. So make sure you have a plan of a plan of a plan in order to project yourself. And this is what we call as well visualization. But visualization need to be not only touching a car or something material, physique, but as well knowing the plan in your mind. What's next? Then in the multiply one, there is part of the most important one, which is know the economic basis. Why does money exist? What money really is? What is inflation? What are the central banks? How money is printing? How the quantitative easing, for example, work? Fractional reserve banking? How the banks are doing loans and what is credit? Money supply? Interest rate, how does it work? What is the difference between a strong and a weak currency and how can you take advantage out of it? What is the market psychology? There is a ton of patterns to know about that. Debt cycles, the economic machine, and many, many more. I'm just showing you some bullet points. I recommend you to watch this video, which is going to be in the description below, which is made by Dalio, which is one of the brightest minds and someone I really like to learn from. So, should you. Now, let's talk about investment strategy because I think that's part of why you are here right now. So, as we all know, there is passive and active investing. Passive can be for founders doing good cash flow, but looking to grow still their net worth while not putting too much time and efforts on it. So, when I say that, passive will be several hours per month. Then active will be more than several hours per month. It will be more than several hours per week or 1 hour a day, for example, depending on what you are looking for and what are your goals. So passive, buy and hold the market. Minimal decisions, relies on long-term growth and compounding. You accept average results. And just to let you know, everyone is saying, yes, if I put on a US bonds and then S&P 500 and then Bitcoin, I just hold and it's good. I will get my 8-10% per year. Yeah, right, but how much is the inflation right now, right? On USD, apparently, it's 4%. I guess it's way more. But anyway, just the fact that passive is interesting, but the thing is, you are counting on the future, and we don't know what the future is made of. So you can still be a passive investor because it's working, and you can still generate returns. But in my way, active is more interesting. Again, it depends on where you are in your businesses. If you only are doing 20K per month and you have like $100K net worth, I mean, better to keep focusing on keep getting more cash flow, protecting and tracking your net worth in order to accumulate more more cash into your saving and start your investment journey. And then if you already have like multiple 7 figures and plus, it makes sense to be more an active investor. Active. So select assets and timing, ongoing decisions. Again, active investors doesn't equal to active traders, right? You are not a trader, you are an investor. You are here for the long term. You adapt yourself to cycles and risk. So for example, right now, S&P 500 is at the top. Are you still doing this year as a passive investor, or are you moving your investment strategy and rebalancing your portfolio? We are going to talk about that in a minute. You aim to beat or protect against the market. Beat the market, so if it's doing 10% per year, you want to do 15. If it's protecting against the market, which means the market is going down, let's say minus 20%, and you are minus 3%, for example, which means you are protecting your capital. There is a famous strategy named by Mr. Taleb, which is called the barbell strategy. As we all know, a barbell is this. And so the point of this strategy is you will put, in this example, 90% into safe core assets, which are safe assets, literally, which can be bonds or specific ETFs or metals, etc. And then 10%, which are going to be, we can call them moonshots. Specific crypto, specific private equity investments like VC funds, etc., etc. And then the goal here is, out of this 90% is to make, it depends on the people, some will say like 7% per year. Okay. So you make 7% out of 90%, which is 6.3%. And then out of 10%, your goal is to do moonshot. So your goal here is to do 100% out of the 10%. So 100% out of 10% is 10%, right? So if at the end you see 7 plus 10 equal 17%. And you don't need to do active investing, right? Just to do this kind of performance, just passive investing. And you can make 70% per year. Of course, it's going to go up, go down, etc., etc. So that's the principle of this strategy. Almost every family offices are using that strategy, and a lot of funds are doing so. So just to show you an example, net worth evolution. So let's say you start with $100K in 2020. That's literally an example. So yield, let's say you put 20% of your allocation in lending borrowing is doing 10% per year. So you're doing $2,000 profit in the first year. So from 20 to 22K. Then NAS 100, for example, which is an ETF with the top 100 innovation tech companies in the US, is doing on average 15 to 17% per year on the last 5 to 10 years. ETF world is going to do 8, 10%. It can be S&P 500 or the ETF world with a lot of companies in the world, BTC, Ethereum. You cannot see the return on investment, but I'm just telling you. REITs, which means real estate investment trust, 3, 4, 5% per year. Bonds, 3 to 5% per year. And crypto fund or any other fund that can do 50, 100, 200% per year. This one is doing, for example, 100% per year on average. And then, as you can see, if you rebalance your portfolio every year, within 6 years, again, it's just an example. Everything is not always going well. Everything can go wrong as well. It's part of the investment journey. You can make 25% per year just with this strategy. Then the goal is to make your own strategy. But how do you allocate your cash in order to create real wealth? So let's think about a pyramid. There is a part of this pyramid that is cash. Cash is the foundation. With cash, you can survive. So there will be your runway, of course. So let's say I'm spending 10K per month. I need at least 6 months runway. At least like minimum. So here you will get, in our example, $60K. Then you need opportunity cash. What is opportunity cash? Like there is an opportunity just coming on your table, whether it's investing in a private company, whether it's a move on a watch or crypto is going down and you can buy it at the right price, etc., etc. Then you need to have opportunity cash. I don't know what's your net worth, guys, but according to your net worth, you have to put 20, $500,000, 10 million, $50 million, whatever. Again, it depends on your net worth into opportunity cash. And then once your foundation is solid and you know you don't need to sell your assets in order to live, because that's the main mistakes of beginners investors and whatever, any type of investors, you need to create your own investment portfolio. And so your investment portfolio I've just shown here is 100% of your investment portfolio. And then according to your strategy, according to your risk, etc., 10 to 30% into speculative and the remaining into the safe core. So let's say 80% safe core and 20% speculative. This is how you structure your net worth. Cash as foundation, then safe core, then speculative. So what can you put in the safe core and what can you add in the speculative one? Just a proof here. So we are the 14th of January right now, 2026, and I made already almost 15% up on my main portfolio on Interactive Broker. Of course, this have a part in the speculative and have a part in the safe core, right? It can be metals, ETFs, stocks, etc. You can buy many things on Interactive Broker. So in terms of asset types, here are some type of assets you can invest in. Of course, nothing here is a financial advice. Do always your own research, do your own due diligence. So first, before investing, you have to understand what are the best stocks and what is a stock, what are the best ETFs and what is an ETF, and what are the best bonds/T-bills if you are looking to invest in, and what are they. So never invest in something you don't understand. So first, you have to make sure you understand what you are investing in. What is a stock, right? Then you have to understand the several sectors in the stocks, whether it can be space, data centers, electricity, manufacture, vehicles, etc., etc. Crypto ecosystem. That's the thing. Like when I'm asking some guys that are doing well in the business, like they are doing like between 50K to 300K per month profit on average with their businesses every month, and I'm telling them, in what are you investing? BTC, Ethereum, Solana, and crypto in general, that's what they're telling me. And then like some S&P 500 because Warren Buffett told them to do so. All right, I respect the choices. But then when I'm asking them, what's your plan? Do you have an entry plan? A thesis? Do you have an exit strategy? What are you looking for? No, I just trust the Bitcoin, bro. No worries. I know it's going to go up, so anyway, I still continue to invest. Okay, but do you allocate a specific percentage of your net worth? No, I just do it like this, and if it's go up, it's good. If it's go down, I just buy it because I trust. Okay, but this is not strategy. It's just like instinct, you know? You have to make sure every time you're investing into an asset, you understand what you are doing. You can invest in Bitcoin and other cryptos. For me, everything except Bitcoin is just gambling. Crypto funds, for example, and delta neutral strategies such as, for example, funding fees, lending, borrowing on, for example, have Morpho and specific funds you can get. Then as well funds, whether it's like real estate funds, crypto funds, private equity funds. The goal when you create your own portfolio, when you use your barbell strategy and you have your investment portfolio with your pyramid, is first, again, to protect and then multiply. So in your safe core, your goal is not to multiply it only, is first to protect against the inflation and then to be able to multiply in order to generate more return. The thing is, in general, you are going to invest in correlated assets, such as you are investing in S&P 500 and Bitcoin. But if there is a big news about the USD, for example, or other type of news, like US tariff, for example, from Trump, then you can get fucked, right? So the S&P will go down and the Bitcoin will go down. Maybe the gold will go up. So you make sure you are diversified, not only in terms of asset types and classes, but as well in terms of not correlated assets. For example, what can be a not correlated assets? Are going to generate a return not based on the market direction. So it can be through interest, it can be through fees, it can be through things that are not explained by the market going up or down. And so, for example, there is, as I talked about just earlier, let's say lending, borrowing. You are literally lending your money in order to get interest. Whether the market is going up or going down, of course, the supply and demand will be different in terms of how many borrowers there will be and lender on the market. So the interest rate can vary a bit from 5 to 7%, sometimes 4%. It depends about the collateral, which kind of crypto you are using, blah, blah, blah. Many things. But my point is the following one. Whether the market is going up or down, so you are always generating returns. Returns that can be passive income / dividends that you can put in your tracker, for example, in here. Lending, for example, you are lending your money here. My bad, you got my point. Then if we go back in the asset types, you can as well invest in real estate. So what can be real estate? It can be quick flips. You buy, you renovate, and then you sell it. It can be off-plan properties, for example, in Dubai. it's still very interesting depending of the areas. I'm going to make videos about that as well. You can buy and then rent the place. You can do rates. You can do tokenized real estate. You can do many things. Then alternative investment opportunities, metals, gold, silver, copper, etc. For example, that's silver. Then currencies can be GPY, can be CHF. Then you can invest in, for example, music royalties. I'm doing so. So whether the market is going up or is going down, everyone is still going to continue to listen to Kanye West, to Ed Sheeran, to whatever. So I'm going to get royalties out of that. From the concert, from the stream, from the movie license, from the radio, from the goodies, from everything related to the track or the catalog. Then collectibles can be Pokemon cards, can be watches, can be many things. Then you can do as well private credit. So it's similar to bonds, but bonds are, let's say, more public, while private credit is literally private. You are just lending your money. So you have 3 ways to lend your money: through bonds / T-bills, I will say similar. Then through lending, borrowing on the DeFi, Web3, blockchain, and private credit. Then you have private equity. If you are going to invest in a VC fund that are going to invest in seed or Series A, etc. So you are just betting on specific companies, LBOs, private equity funds that are doing LBOs and just buying back companies. Pre-IPO, such as the ones coming in 2026, OpenAI, SpaceX, Stripe, Kraken, and others. And then you can do private deals. So I do as well private deals. I own shares in several companies that are not public, so that's the part of being private, and I'm getting dividends out of that, which can be as well another passive income. And your goal at the end of the day, how can you get an infinite runaway? It's very simple. You spend 10K per month, and your passive investments, which can be affiliate, dividends, revenue from lending, borrowing, etc., are bringing you as well 10K, which means you break even your expenses. Of course, the best is to have a bit more. So let's say 15K from passive income. And then you literally have unlimited return on investment. This is how you become, in my opinion, financially free. You have the geographic freedom, so you can live wherever you want. If you choose to live in Dubai, it's because you choose it. It's not because you are forced to. Or maybe you got forced with the taxes set up in your country, but anyway, then financially free. So you have an unlimited runaway, and then time of freedom. Whenever you want, you can stop working because your business is running automatic, or you don't have any more business and you're just being an investor, whether being a passive or an active. So that's the system. Track, protect, multiply. You cannot multiply if you have leaks and your money is not well protected. So make sure you track everything of your personal money in order to know your exact capital and where is your money as well. This is in here net worth allocation. Is it in cash paper? Is it in specific assets? Is it in account like Wio Personal, Chase, Revolut? Of course, in your personal net worth, never include your business bank account and your business crypto, because what you own, you own. What is in the company is in the company, even if you own the company, right? Because after you have to withdraw, you have to probably pay taxes, depends of your setup. Then it can be ledger, it can be interactive broker, it can be specific investment accounts. I have above 30 plus lines in the net worth allocation. Then into your income as well, if you have many types of income, you can add more income. So this is what we are seeing inside Insiders Capital. If you want to book a call in order to know more about Insiders ecosystem in general, because there is not only Insiders Capital, you get access through memberships to Insiders Capital, Insiders Network, Insiders Concierge, Insiders Properties, and other future services. Click in the link in the description below in order to book your call. I'm going to make way more YouTube videos and Instagram reels. I need to start about that because I was focused on other things. It's been years I'm doing investments. It's been years I'm helping my friends, then clients. And now I've decided to go public, to make more content, to help, because there's a ton of content, how to go from $0 to $10K per month with your business, blah, 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 how to do 6-figure with your business. But actually, no one is really sharing and showing how to turn your cash flow into an investment system in order to compound and to create real wealth. Because everyone is looking to get a Lamborghini, get the right Audemars Piguet, get the right Patek, get the etc., etc. It's cool. It's material. But at the end of the day, what you're looking for is for a system that is working without you while you sleep, generating your returns on the money you made. And that's the thing. Don't burn your money. Invest it, and then you can use your passive income in order to fund your lifestyle. Long-term vision. It's cool to enjoy life, but it's cooler, in my opinion, to still enjoy life. Again, I'm not here to say cut all your life expenses, just optimize it, track everything, protect, and then multiply for the long term. You are not going to be a slave of your own businesses. You are not going to be slave of your time. You will manage your time, you will manage your capital in order to live the life you want. To Arthur.